Hello students, in our previous lecture we are solved a total taxable income of Mr. Chandan. In our today's lecture we are going to solve another illustration, that is illustration number 2 on computation of total taxable income. So illustration number 2, that is Mr. Arun Deshmukh, Pune, who is handicapped 50% disability, has furnished the following details of his income for the year ending 31st March 2021. So Arun Deshmukh worked in Pune and he is handicapped disability 50%. Furnish you the following details of his income for the year ending 31st March 2021. Okay, with the help of information provided by Arun Deshmukh, here we compute the total taxable income of Arun Deshmukh. Okay, first of all we bifurcate the incomes as per the heads of income, that is income from salary, income from house property, income from business or profession, then income or capital gain, and fifth, that is income from other source. So salary it is a income under the head of salary. Okay, salary per month rupees 17,200. Bonus, so bonus is also part of salary. Okay, salary, okay, bonus equal to 2 months salary. So we know how to compute the bonus, that is 2 months salary. So 17,200 multiplied by 2 is equal to 34,000 is equal to 34,400 is the total bonus received by Arun Deshmukh from employer. Conveyance allowance spent for performance of duty at rupees 550 per month. So it is also a conveyance allowance is also included in salary, but the conveyance allowance is spent for, okay, spent or expend for performance of his duty. So it is fully exempted. It is fully exempted. Entertainment allowance fully taxable. Okay, entertainment allowance fully taxable. Okay, we know the entertainment allowance is exempted or allowed for deduction only for government employee under section 16 subsection 2. Advance salary is also income from salary. Then HRA, he received a house rent allowances of rupees 2,000 per month from the employer. Mr. Arun Deshmukh received a house rent allowance of rupees 2,000 per month from his employer, but he paid a rent of rupees 2,700 per month. So it is also part of salary. Okay, but here we need to compute a working note of exempted HRA. So we already know how to compute HRA. First of all, here we need to compute a salary for HRA. Okay, so salary for HRA, we already discussed. Salary for HRA is equal to basic salary plus DA plus commission on sales. Okay, DA is considered when it is considered for retirement benefit. Okay, when it is considered for retirement benefit. So here we compute a working note of exempted HRA. Then personal medical bill of rupees 10,000 were reimbursed by the employer. Okay, reimbursed by employer. his treatment has been made in private hospital not belonging to the employer. So it is taxable. Okay, it is fully taxable. The employer reimbursed the medical bill expenses to the employee, so it is fully taxable. His contribution to the companies, okay, his contribution to the company's RPF recognized a provident fund. His contribution to company's recognized provident fund is rupees 1900 per month, 1900 per month, and the employer contributes equal amount. So we know the treatment of employer's contribution to RPF. So employer's contribution to RPF is exempted up to 12% of salary. So here again we need to compute a salary for HRA. Okay. So on a 12% of salary is exempted. Remaining balance is taxable. Got it? Then the contribution of Arun is allowed for deduction under section 80C. Okay, allow for deduction under section 80C. Okay, so here 80C, allow for deduction under section 80C. Okay, so remember the two treatment of RPF, that is employee's contribution to RPF is allow for deduction from gross total income under section 80C, and the employer's contribution is exempted up to 12% of salary. Then interest credited to provident fund account at 12% per annum, rupees 4800. So we already know the the interest on RPF is exempted up to 9.5%. Okay, so here we bifurcate the income relating to the head of salary. Okay, here income from business, so it is another head of income, that is it is a income from business, so it is a income from business. Okay, so it is a income from business, income from business, head number third. Okay, head third, got it? Then head third, interest on government securities 3000 gross, so it is income from other source. It is a head of income from other source, head number 5. Okay, income from other source, head number 5. Okay, then interest on bank deposit received. So interest on bank deposit received is also income from other source. Okay, is also income from other source, head number 5. Okay, head number 5. Now here we get a deduction of interest on bank deposit received. First of all, we consider the interest on bank deposit is the source of income or other source of income, and second, Interest on bank deposit is allowed for a deduction under section 80C. Okay, under section 80C. Okay, that is, sorry, here interest 80TA, interest is not allowed for deduction. The deposit of the employer is allowed for deduction. So here income from other source, interest on bank deposit is a income from other source under the head of income from other source, fifth head. Donation paid to, so it is allowed for deduction under section 80G, but how much deduction is allowed? That is 50% donation is allowed for deduction. How much? So 50% donation is allowed for deduction, because the donation is given to government for promoting of family planning. Okay, here, sorry, 50%, here the wrong statement. Donation to government by mistakenly, here donation is given to, or donation is paid to, National Children Funds. Okay, so that it is allowed for deduction under section 80G, that is 50%. Got it? Donation is given to government for promoting family planning is allowed for deduction, that is 100% donation is allowed for deduction. Donation paid to National Children Fund, it is 50%. Okay. Deposit, so deposit is also allowed for deduction under section 80C. And professional tax is allowed for deduction under section deducted from gross salary 16(3), subsection 3. Okay, so here we bifurcate the income received from various heads. Now we compute the total taxable income of Arun Deshmukh. So solution: computation of total taxable income Mr. Arun Deshmukh, Pune. Assessment year 2021-22, previous year 2020-21. Prepare 3 column particulars rupees. First, that is first head, that is income from salary. Income from salary So basic salary is given here. Okay, salary rupees 17,200 per month. Into bracket 17,200 multiplied by 12, that is amounting to rupees 2,06,400. Then bonus is equal to 2 months salary, that is 17,200 multiplied by 2, that is 34,400. Okay, then next conveyance allowance spent for performance of duty. Conveyance allowance received 550 per month multiplied by 12 is equal to, in inner column, because it is fully exempted from tax, the assessee will use this allowance for the performance of duty, so it is fully exempted from tax. Got it? So put the figure in inner column, that is 6,600. 6,600 less exempted 6,600. In outer column the amount is nil. Okay, in outer column the amount is nil. Then next that is entertainment allowance. So entertainment allowance is fully taxable. Okay, so entertainment allowance received amounting to rupees 450 per month that is equal to 5,400. Okay, so 5,400 fully taxable. Then next that is advance salary for April 2020, 1 rupees 30,000. So advance salary is also taxable. Amounting to rupees 30,000. Then next HRA. Okay, so actually HRA received that is 2,000 per month. Okay, here actually HRA received from employer 2,000 per month. So 2,000 multiplied by, here 2,000 multiplied by 12. So in amounting column it is 24,000 in inner column. Okay, because we need to prepare a working note of exempted HRA. Okay, for computation of exempted HRA we need to find out the salary for HRA. Okay, so salary for HRA is equal to basic salary plus DA. DA means dearness allowance considered for retirement benefit plus commission on sales. Okay, so HRA salary is equal to basic pay, that is 2,06,400. We already compute the salary, okay, here, okay. So salary is 2,06,400 plus DA is not given, so nil, plus commission is also nil, is equal to the salary for HRA is equal to 2,06,400. Now we compute a working note, okay. So working note number first, computation of exempted HRA, computation of exempted HRA, into bracket list of the following three, okay. List of the following three or minimum of the following three is allowed for deduction. So first point, that is actual HRA received. So actual HRA received, that is 2000 multiplied by 12 is equal to 24,000. Then second, rent paid. So the employer paid a rent, not employer paid, sir. Employee paid a rent of rupees. Here he paid means the employee paid a rent of rupees 2,700 per month. So 2,700 multiplied by 12 is equal to 32,400 less 10% of salary, okay, less 10% of salary. So 10% on 10 divided by 100 multiplied by salary. We already compute a salary for HRA, that is 2,06,400. So 10%, that is 26,040. Sorry, 20,640, not 26,000. 20,640. Okay, 20,640. Deduct this 26,400 from 32,000. That is 32,400. Put the figure in outer column, that is amounting to rupees 11,760. And third point, that is 40% of salary. 40% of salary. Here we consider the 40% of salary because the employee or the assessee worked in Pune city. Okay, if he worked in metropolitan cities, that is Mumbai, Chennai, Kolkata, Delhi, then we consider here 50% of salary. So 40% of salary is equal to 40 divided by 100 multiplied by salary. We compute salary 2,06,400. That is amounting to rupees 82,560. Now make the total. Here don't make total. Now find out the exempted HRA. So exempted HRA is equal to exempted HRA is equal to list of the following three. So here list means the minimum value is allowed for deduction. So minimum value is rupees 11,760. So minimum value is allowed for deduction, that is 11,760 is the allowed for deduction or exempted HRA. Here we compute a exempted HRA. So okay, it is very easy. Remember the computation of HRA. Okay, then it is very easy. Okay, so here list of the three. Okay, list of the three. List of the three. List of the three, that is 11,760. So it is deducted from actual HRA received. Okay, less exemption or exempted HRA working note first, that is 11,760. Remaining balance is taxable, that is 12,240 is the taxable amount of HRA. Taxable amount of HRA. Okay. Then next, medical bill reimbursed by, so it is fully taxable, amounting to rupees 10,000. Reimbursed by employer, fully taxable, amounting to rupees 10,000. Okay, 10,000 rupees. Okay. Okay, so it is very easy to compute a exempted HRA as well as medical bill reimbursed by employer, fully taxable. Whatever the amount given by the employer to employer, fully taxable. Then next, contribution to RPF. So employees or associates contribution to RPF is allowed for deduction from gross total income under section 80C. But employer's contribution, associates means employee contribution is allowed for deduction under section 80C from gross total income. But employer's contribution is exempted. Okay, is exempted up to 12% of salary. So employer's contribution to RPF, okay, put the figure in inner column, that is equal amount. So 1,900 multiplied by 12. Okay, equal amount contributed by the employer. Okay, so here 22,800 less exempted, less 12% exemption. So 12% on a salary. So we already compute 12%, 12 divided by 100, not 12%, 12 divided by 100. We already compute a salary, that is 2,06,400. 2,06,400. That is 24,768. 24,768 is the exempted from tax and remaining balance is taxable. Got it? So put figure in outer column. Okay, so here the balancing figure, that is fully taxable. So here 12%, okay, whichever is minimum. Here 24,762 is not allowed for deduction, is equal to 24,768 is the total contribution, but the employer contribute amount or contributed amount is rupees 22,000. So maximum deduction is rupees 22,800, not 24,768. Okay, so maximum deduction is actual contribution is equal to actual contribution. So in outer column it is nil. Then next, interest on RPF, interest credited RPF at 12% amounting to rupees in inner column, because it is exempted up to 9.5%. So 12%, 4,800 less exempted, less exemption 9.5%. So 9.5%, that is into bracket 4,800 multiplied by 9.5 divided by 12 is equal to, here total interest is 12, so divided by 12, not 100. Okay, so the here 3,800, 1,000 is taxable. Then next, so here it is a income from business, so it is consider under the head of income from business. So here we consider the all income under the head of income. Okay, now we make the total. Now we make the total of outer column, and total is equal to 2,99,440. That total is called gross salary. Okay, that total is called gross salary. Now gross salary, now we deduct deductions, less deductions. Okay, deduction from gross total income, that is first standard deduction. So deduction under section 16. Okay, standard deduction under section 16 subsection first A. Okay, amounting to rupees 50,000. So standard deduction is rupees 50,000. Second, entertainment allowance. So entertainment allowance is allowed for deduction under section 16 subsection 2. Only for government employees. So he is not government employee, nil. Then third, that is professional tax. So professional tax is 2,700. Okay, 2,700. Make the total and deduct this total from, that is 52,700. Okay, so here the income from salary is 2 lakh 740, not 70. It is called a income from salary. So salary is very important, so that we solve a 5 examples on salary. 5 examples on salary. Then next, that is second point, second head, income from HP. So house property nil. Third, income from business. We already bifurcate the incomes under the head. HP nil. Business 2 lakh. Okay, then next, fourth, capital gain nil. Then fifth, income from other source. So income from other source is given here. Okay, that is interest on government security. Okay, amounting to rupees here 3,000. And interest on bank deposit amounting to rupees 3,000. Okay, now make the total. Put this total in outer column. 6,000. Now here make the total. Make the total of outer column. That total is called gross total income. Gross total income 4,52,000 740 is called gross total income. Okay, then allowable deductions less deductions under chapter 6A. Chapter 6A तिला म्हणू deduction under chapter 6A. Okay, under section 80C to 80U. First, RPF 22,800, 22,000. ATC's deduction. Then next RPF, then next term deposit 60,000. Okay, then deduction under section 80G. Okay, here deduction of 80C. Now deduction under section 80G. So 80G is equal to donation to National Children's Fund. So 50%. How much? So 50%. So 50%, that is 2,500. Okay, 50% on 2,500, that is 1,250. Now make the total of inner column and put the figure in outer column. Here 75,000. Here one deduction is remaining, that is 80U. 80U for disabled person. Okay, that is standard or fixed deduction. Fixed deduction for disabled person. Okay, that is 75,000. Okay, 75,000. Now make the total. That is 1,61,050. Deduct this from gross total income. Here we get the 2,91,690. It is called total taxable income. Okay, total taxable income. So here we compute a total taxable income, very easy. Here why we get a deduction for under section 80U? Because Arun Deshmukh is a handicapped person, that is 50% disability. So he get the deduction under section 80U. Okay, deduction under section 80U for handicapped or blind person. Okay, maximum deduction is rupees 75,000, that is fixed deduction. Okay, got it? So here we compute a total taxable income of Arun Deshmukh, that is 2,91,690 is the total taxable income. Okay, In our next lecture, we are going to discuss or solve illustration third on computation of total taxable income. Okay, thank you very much.